All right, what's going on? It's what the F happened. And seriously, look around, look at the news, look at what's going on in the markets. I mean, what the F did happen. Folks, listen, if you're not a history buff and you don't study the Great Depression and other recessionary periods, shame on you. Because I'll tell you something. If we look at 1929, and those of you that are too young to remember, that's the year the Great Depression kicked in. If you look at that and you look at the markets today, they are 94% correlated. That means they're almost identical. So what happened in 1929 is what's happening today. What the F is going to happen next? Well, stay tuned and we're going to show you. All right, that's right. It's What the F Happened, a weekly show where we review the markets and we rant, we rave, and we will argue with you, Nick, two ways about that. Matter of fact, we want to argue because, hey, your opinions, my opinions, Steven's opinions, they're all different. Let's get them flushed out. Let's do a little bit of arguing. Let's banter and let's go at it. We can't throw fists here. This is all virtual, but we're going to have some fun because there is so much to talk about. Just yesterday, the markets fell almost 2%. The NASDAQ down all over 2%. And if we did a show last night where we correlated the .com crash with the NASDAQ. We literally just looked at the .com crash and the NASDAQ. There it is right on the screen for all of you on Facebook, all of you on YouTube. The only people that can't see that screen are those of you on TikTok and Instagram because I'm sorry, but all I'm going to say is it looks identical. It's the same hockey stick. It looks literally like, Steven, can you tell the difference between those two?
No, it's a 94% correlation, and the S&P's a 95, which I don't have up. I mean, it's mirroring exactly. And when we see what led to that, what's leading to this right now, what's going on, we're going to show you a bunch of stuff today. It's never been a more important time to understand money, understand where your money is invested, what it's doing, how to prepare and get ready for the opportunity, not only to survive what's coming, but also thrive and really set yourself up for the future with it.
Why just survive? You can thrive because any recessionary or depressionary period, it's terrible. Okay. We all know that it's bad for most people because most people lose everything. Look at 2008. Look at the Great Depression. Look at the .com crash. Hell, just look at last year with COVID. A lot of people lost a lot of things during those periods, but some people thrive during these economic recessions and these economic collapses like the Great Depression. And the way to thrive is to be ready and to plan for it. Cash, this is my partner in crime right here. This is Lazy Cash. He is our shop cat, and he just wanted to come in and say hello to TikTok, Instagram, to all of you. So Lazy Cash, go be lazy. All right, Steven, where do we want to start, man? There's so much stuff. I mean, we can look at 1929 versus today. Do we want to talk a little bit about the similarities to what was going on in 1929 where the stock pickers were like, it's going to the moon. Everything going to the moon. Everything was going up. The market seemed like they would never, ever go down. And then, boom, just like that, the markets tanked and you had the Great Depression. People lost everything. Banks went out of business. They lost their homes. They lost their livelihoods. They were standing in line. They barely could eat. Most people could not eat. It was an awful time. Just look at the Great Depression. But see, a lot of the people watching are younger. I'm 44, and I mean, we probably have everybody from 16 straight up to hell. I mean, we probably have some 80-year-olds watching this, but the 80-year-olds would remember this. The 16-year-olds would be like, I don't even know. Even if you're in your 20s, do you remember 2008? Most of you don't, which is crazy, which would mean that most of the investors out there, Steven, only know a bull market. They only know the market going one way. They've never seen an economic recession or depression. So we got to get that out of the way. So why don't you take it from there, Steven? Show us what 1929 looked like versus what today looks like.
Yeah, we'll look at some charts, but you really want to follow kind of, what's going on in the news because, you're always going to be told one thing from the talking heads on the TVs and from the news agencies and things like that. And in reality, it always seems to be the reverse is happening behind the scenes, right? You know,
100%.
it's like they always go back to say, like, when everybody else is driving one way off a cliff, you might want to start looking the other direction. When everybody's buying, it might be good time to sell. I mean, we saw the market come down yesterday. Well, guess what's going to happen today? We're going to see a big bounce back. Everyone's going to say, oh, it's time to buy back in. So this is an article from 1929 in the New York Times, October 30th. Brokers believe bottom is reached. So we all know what happened what happened leading into the early 1930s, but they thought that the bottom had been reached in 1929. That's a newspaper article. Now, let me show you kind of some of the statistics and what was actually going on back then. So this was, that article was written, and then 3 years later, let me show you exactly what was going on.
So those of you on TikTok and Instagram, what he just showed is an article in 1929. I believe, what was that? The Wall Street Journal?
It was the New York Times in October 1929 saying brokers believe the bottom has been reached, where we are today. So that was 3 years prior. So then this is what happened. After a one-day recovery on October 30th, when that article came out that everything was okay, which you're going to see a lot of today, when the Dow regained 28 points or 12%, to close at 258, the market continued to fall, arriving at an interim bottom on November 13th, 1929, with the Dow closing at 198. The market then recovered for several months, starting on November 14th, 1929, with the Dow gaining 18 points to close at 217 and reaching a secondary closing peak, bear market rally, which Chris can tell you more about bear market rallies in a minute, of 294 on April 17th, 1930. So that was about a 6-month time span. Then the Dow embarked on another much longer steady slide from April 1930 to July 8th, 1932, when it closed at 41, its lowest level of the 20th century, concluding an 89% loss for the index in the less than 3 years.
Wow, so 89%. I mean,
and we right now are seeing identical charts from 1929. Identical. With the ups, the little tiny, we're testing the down, we're testing the down. Are we going to follow history and have an 89% drop? You tell me, Chris.
Yeah, it's interesting. Things are way too similar. The NASDAQ and, what happens in the dot-com crash. For those of you that don't remember the early 2000s dot-com crash, this is when I entered the Wall Street world. This is when I started working as a financial advisor, because that recession brought my retail stores, which were skateboard, snowboard shops, to a screeching halt. I wasn't able to pay my bills, so I had to get a job. So I remember the dot-com crash, but I was a young man. I was in my early 20s during that period of time. But I remember watching the markets tumble, and it all started with the tech. Tech companies were built on literally straw houses or house of cards, if you were. There was nothing to the companies, but yet they were Wall Street. They were IPOing everything. They were all going public, and everybody was rushing in because of confidence. Investor confidence is what drove the markets and the tech bubble, which eventually the bubble popped and then everything came crashing down. If we look at that and compare that to NASDAQ today, which is technology, just so everybody knows, a little different the way that they're structured today, but it's all the same, except for today, NASDAQ is mostly large tech companies. Back in the dot-com crash, yes, some of them were large, but there was a lot of small startup tech companies. Those companies today in the NASDAQ are much bigger, but there's still a lot of small startups. So when we look at those two charts, which we just showed, for those of you on TikTok and Instagram, they are identical hockey sticks. If you don't know what a hockey stick looks like, it's basically kind of a straight line, the part you hang on to, and then it goes straight up. That's the curve, the stick. So that's what it looked like. But now let's look at the overall markets and compare 1929. Heck, we can do 1926 to 1929 because the whole ramp up was the same with a couple different changes or a couple differences. Back then, in 1929, and I've studied this like a freaking nerd on steroids or crack or whatever you want to call it. I've just read every book about the Great Depression. And during that 1929 period, the market had some turbulence, but then the market started going up. And all the stock pickers and all the talking heads were saying it's going to keep going up and up and up. And they were saying there's no way it's going to go back down. But it did. You just heard Stephen say it tanked and it created the Great Depression. But here's the differences. Today, in this market, I could go back to the dot-com crash, but let's just start in 2008 with the Great Recession. The markets have been overly stimulated. Wall Street is like the crying baby that never stops crying until it gets what it wants. Any of you parents out there understand what that is. You know, the parent's always trying to just give the baby whatever it needs so it stops crying. You know what that baby is today? Wall Street. So when the Fed doesn't give the Wall Street what it wants, it cries like a little child. And what does the Wall Street want? Low interest rates, stimulus money. They want the government to keep buying bonds, that bond buyback program. They just want all these stimulus things. So that didn't happen in 1929. In 1929, the markets were stimulated by big banks. Now, big banks and big bankers back then were the equivalent of what the Fed and, the Fed was around then, but they were the equivalent of like what the government's doing today. They were pumping tons of money in. In retrospect, it was probably about the same equivalent dollar amounts. But today, the one stimulating the market is the government with all this crazy modern monetary theory, MMT. Okay, that's the new economic theory that they're doing. They're pumping money into the markets because the crying baby won't stop crying, and it's just creating a massive bubble. If you think the bubble of 2008 or the bubble of the dot-com crash or the bubble that was created in 1929 were big, folks, this bubble is ginormous. Like, think of the size of one of the largest planets in the solar system. Yeah, that's about what this bubble looks like. And the bubble has been pushed and kicked and pushed. That's why we're in the longest economic bull market we've ever seen, ever. It's because the government keeps pumping money in to quiet the crying baby. But eventually, the baby will stop crying. And eventually, that crying will subside by the markets exploding, because you can only stimulate a market so much. But I can't tell you when this is going to happen. Ray Dalio can't tell you when this is going to happen. Warren Buffett hardly says anything anymore because he's waiting for the opportunity, which is coming. He's a patient man. And time is something he's always had in his favor because he's just understood that making money in the markets involves time. So to conclude what I just said, all you need to know is the storm is coming. It very well, as James Rickard, one of the leading economists, just Harry Dent, one of the leading economists in the world, both of them will tell you openly in their books and in their talks, the markets will collapse. So now that I've scared the shit out of all of you, how many of you think the markets are going to go to the moon? And how many of you actually think there might be some reality and some truth to what we just said and what these economists are saying? I want to hear your comments. Who on here, and we're going to read these comments and follow with them. I've got TikTok. What's the gold right now? I think gold is high, but gold is high it's all relative. I would definitely buy gold right now, but gold is at a high point. I think crypto, a lot of people are thinking that there's a safe haven in crypto, Bitcoin, Ethereum, these shit coins, all that stuff. A lot of people are plowing money there because they don't really trust the markets. Folks, you need to understand something, and we're going to show you in a second, but I'm just going to kind of give you a highlight of this. The crypto markets, Bitcoin, Ethereum, and all them are directly 100% correlated to the stock market, the Dow, the S&P 500. Look, just yesterday, the markets fell, and my phone's right there, but the markets fell 500, and I think we finished at about 169 or 568 points down. How much did Bitcoin fall? 2%. It's down to almost 40,000. And every time I do this, I tell you all my strategy for Bitcoin and Ethereum, and I lead with Bitcoin, is very simple. When Bitcoin gets to 40,000, I buy. But I'm always buying, because I'm buying 200 of Ethereum each week and 200 of Bitcoin. I'm dollar cost averaging in because I don't want to play the game. Then when the markets fall, and Bitcoin falls with the markets because they're correlated, I buy at 40. And then when the markets rally and Bitcoin goes to 50, I sell. Holy shit. What a novel idea. I make money by just following the support and resistance lines. But everybody else just plows money in and says, oh, it's going to go to the moon. Maybe, but it's probably going to go to the bottom of the ocean first, and then it's going to come back. And when it goes to the bottom of the ocean, all the way down, you're going to sell. You're going to get scared, and I'm going to buy what you sell. That's how it works. Warren Buffett buys when you sell, and he makes billions of dollars, maybe more than that, tens of billions, because somebody's always got to be selling and somebody's always got to be buying. And the people that sell based on fear because they didn't follow the same rules Warren Buffett followed, that I follow, and all the other big investors, including a hedge fund manager I had on yesterday. Steven, what do you got here?
Look at this out. So this is a 1 month chart comparing the Dow and the Bitcoin. 1 month chart. Look at that.
Listen, folks, like that's a month chart, and you can almost see it's with the exception of maybe a couple fallouts of the Dow. No, actually, they're correlated. Look at that.
Yeah. Well, one thing you'll notice is Bitcoin's just a lot more volatile.
Yeah, that's the only thing. So,
but the overall trend.
Yeah, go ahead, Stephen.
No, I'm just saying the overall trend is, I mean, you got a little up, then you got the down, you got the little ups, and then you got the big down, and you'll see the Dow's kind of back up and down. You know, it's all right there. I mean, within a week time of each other, they're pretty much identical. You know, obviously, just a lot more volatility in Bitcoin. I'll show you a 6 month and a 1 year too, but talk about
real quick, let me just tell Bitcoin and or let me just tell TikTok and Instagram a little bit. So we're looking at two charts here, guys. We're looking at two charts. We're looking at Bitcoin and we're looking at the Dow Jones. And outside of Bitcoin having more volatility than the Dow Jones does, just because Dow Jones is bigger, Bitcoin is literally like an infant still. It's the early years. So, but if you really just look at them, they are identical. When the markets in the Dow fall, Bitcoin falls. When the markets rally, right there, Bitcoin rallies. That's correlation. Go ahead, Stephen. What else we got to show them?
I was going to show the 6 month. We got the 6 month lined up here. I mean,
some people on Instagram are saying, what is the biggest bubble ever? Well, the biggest bubble ever, I would say, was probably the 2008 recession, because that one hit so hard and so fast, and it was so pumped up by, you know, those CMOs and everything that happened. Just watch The Big Short, you'll see. So I would say that's the biggest bubble, but the biggest bubble really for your answer, Slayer, is the bubble right now. That's the biggest one. To the moon for another year. Okay, so Charles says, and listen, like, I like what Charles just said. He said, to the moon for another year. Charles might very well be right. We can't time the market. But the question comes down to all of you, okay, listening. Do you want to risk it? Do you want to stay in this game at these the speculative level and try to ride this thing to the very top and try to get the top? And I'll tell you, every one of you, if you do that, you will fail, because you can never get the top and you can never get the bottom and you can never time the market. Three things to remember. Just like Warren Buffett says, buy low, sell high, and don't lose money. You can't get the top, you can't get the bottom, and you'll never, ever time the market. So Charles might be right. I can't say Charles is wrong. He said it's going to go to the moon for another year. But are you willing to put it all on the line to risk it, to try to get another 5 or 10% over the next year, maybe 20% if you're in the right things? Take that, but you also run the risk that if he's wrong, he could be down 60% and lose it all. That's something you all need to consider. It's very important. And then Eric here on TikTok, Stephen, and then we're going to get to this because I love this chart. That's even better. Eric just said, hey, I'm trying to connect with your team, but no meetings available for the next 2 weeks. Stephen, that's the funny one. You're right, Eric. It's very difficult to connect with our team inside the next 2 weeks. We just spoke at two very large events out in California, and we got over 100 people that came in and scheduled appointments. So, Eric, I promise you, it's worth the wait, bud. So get on the calendar ASAP. One of our money mentors will be able to get you. And also, if you want, email snaggy@chrisnaugle.com and see if he can fit you in if you really just can't wait. But I will tell you, we are that busy. We have that many people wanting to book calls because of the events in TikTok. So thank you for that, because that's a good point. You have to burn money, eggs. You have to have burn money, eggs never in one basket. I'm hoping we all know that. So that's Drew. What Drew is saying on TikTok is he's saying be diversified. But do we all understand diversification? Because most financial advisors think true diversification is just a little bit in stocks, a little bit in bonds, a little in tech, a little bit in mix. You know, they mix it up within the same markets. All boats rise with the tide, and all boats fall with the tide. Got it? So if your diversification model is just all stocks, mutual funds, and ETFs, you're already set up to fail. True diversification, as it would come from a hedge fund manager, which you can watch the Chris Naugle show, we just had one on yesterday, comes by diversifying outside of the market, finding non-correlated asset classes to diversify your holdings. And his rule is never more than 1/3 of his net worth in any one position. So his diversification model is, I got a little in stocks, I got a little in crypto, I got a little bit in real estate, I got a little bit in first secured notes, I got a little bit here, a little bit there, outside of the markets. So that's diversification. Thanks for that. All right, Stephen, what do you got there, man? Let's pull that one up. And then we got to get
comment. Do you think that the upcoming crash, whenever it happens, will be the same crash that Kiyosaki predicted in the prophecy? Did he ever update that prediction? And I'll go ahead and, what I'll say about Kiyosaki is if you follow what he's saying today, he's even more bearish than ever. He is a true believer that there's going to be a huge crash. Now, where I differ from Kiyosaki a lot is he's a big believer in crypto. Put a lot of money in crypto right now. Buy crypto. I don't know if that's a smart move, and here's why. Let me show you exactly why I say I don't know if that's a smart move. Because what we're seeing when we're tracking these charts is Bitcoin is just so very similar to the Dow. So, I mean, look, that's a 1-year chart. So that's a pretty good amount of time to look at. Again, Bitcoin has that large volatility that they had that huge spike up to 64. But if you remove that, let me see if you can see it. So if you look at my pointer, if you remove that big spike, it's almost identical, right? So where is a safe haven? Like, a lot of people are saying, let me get into crypto because that's going to be the safe haven when the market crashes or if the dollar crashes, things like that, right? But is it? Maybe. Maybe, but is now the right time to buy? I mean, Chris has a great strategy of trading within a window. I really like that because, you're kind of playing right there and you're paying attention. But long term, if you're looking to put money somewhere, are either of these a good place right now, Chris?
I would say no, but here's the thing. The way I invest is strict rules. The way that our private hedge fund invests is very strict rules. Our private hedge fund doesn't even take positions in traditionally traded stocks. If we're trading stocks that you all trade on the exchanges, the Dow, the S&P, the NASDAQ, all those different exchanges, if we trade on there, we don't hold those trades longer than a day. And even if we do hold overnight, they're always hedged with option contracts. We hedge them so that if it goes down or gaps down overnight, we've already protected ourselves. We don't trade the same way that the average person does. And I don't expect the average person to ever trade the way we do. We've been doing this a long time. And that's why I have a professional full-time trader that trades our hedge fund. But here's what we do. We are always out there looking for unique opportunities. And how do you find unique opportunities? Your network. Your network of people. But if you're not in a network of people that have access to these opportunities, like in television, the opportunity that I was just presented when we were in California, and another one called cauliflower. That's they use cauliflower to make pizza doughs and crabs and all sorts of stuff. We are taking positions in those two companies, which are not publicly traded companies. Those are massive opportunities because cauliflower more than likely will be sold off. We'll ride that sell off and we'll profit on the exit. In television will be a raging success because every kid out there and parents too love video games, and their new terminal is going to disrupt the entire video game market. Those are what we do. But you see, that's great. And you might be like, oh, that's awesome. But the average person doesn't have access to that. The average person with money in the 401k can't have access to anything outside of what their 401k provides. So what do? Well, I always tell them the best thing you can do is look at how much risk you're willing to take. And look at your portfolio and say, how spread out is my money amongst things that are safe and things that are risky? And then does that fit your overall risk? Could you and would you be okay losing 30% of the value of your 401k? If the answer is no, you got to make changes. You have to buy low, sell high, and don't lose money. How do you do that? It's very easy. Log into your 401k, start moving things around. Look for a U.S. government bond fund, which would be 20 or 30-year treasuries in most cases, and move whatever portion you don't want to lose into that, because that's your safe place. Or if you got a cash account, listen, people are so scared of having cash right now because of this inflation pressure, which is very real, but cash in the next year or 2 years isn't going to make or break you like a market crash will. Having money in cash inside your 401k might be the greatest thing you could do. You're not going to make any money on it, but when the market tanks, you can just watch the news and, oh, Warren Buffett just bought Apple. Great, maybe I'll buy Apple. Which one of these stupid, shitty mutual funds in my 401k has Apple in it? And then you read the prospectus and you do that. Or you guess, hey, listen, here's the beauty. If all boats rise with the tide and all boats fall with the tide, when all boats fall, just put your money in the S&P, put your money in the Dow. So when the whole market crashes and you got all this money in cash in your 401k and everybody says you're an idiot for having money in cash, you're missing out. Just remember, they're all buying into the FOMO, the fear of missing out. When that happens, what do you do with your cash? You put your money in the market when it's down 40%. That's just a novel idea. Like, how many of you can understand this? Does that make sense? Because should make total sense. Michael on Instagram, he's here every week. Michael, thanks for joining us. He's Michael Brightside Official on Instagram. He made a comment. He said, what will happen And people ask this all the time. What will happen to the value of the US dollar and other currencies if we crash? So let me just cut out the other currencies, but let's talk about the US dollar. If the entire market crashes, here's my prediction. The US dollar will become more valuable. Why? Because if everything else crashes, China, forget it. They're already done. Have you guys been following what's going on in China? It's one giant lie. It's one giant, magic trick that's going on there. The largest developer is defaulting on tens of billions of dollars, and that's going to trickle down to all other countries and all the other markets because it's all intertwined. That's it. It's all intertwined. And when that happens,
real fast on China, real fast, Chris, they're running out of tricks too. I mean, you see this, they just banned cryptocurrency again last week. So they're doing, and this leads into another comment over here, and then you can keep going. But he said, what about market manipulation from big institutions and smart money? And absolutely. I mean, they're going to do everything they can to try and push away from what they can't control. And cryptocurrency is one of those things. So you see China leading the way on these bans. And I know they banned it in the past, but I almost believe really strongly that this is their ban right now. It's just going to not stop.
Yeah. And you're right. So I will tell you this. Here's what I think. And Kiyosaki talks about this. Harry Dent talks about this. Rickards kind of talks about this a little bit. These are all pretty big, I don't want to call talking heads, but economists and Robert Kiyosaki. So somebody had asked, do you think this upcoming crash, whenever it happens, is the crash Robert's been predicting? Absolutely. It's all the same thing that everybody's been predicting, from Rickards to Dent to Kiyosaki to Ray Dalio. All of them, they're predicting the same thing. Yes, maybe they're talking about it differently. Maybe they're saying there's different ways to do it. Some are saying gold, like the gold bugs, like Rickard, James Rickards, and look up his books. He's written some really good ones. The Next Great Depression is a great book for all of you. He likes gold. Harry Dent loves U.S. government treasuries. Okay. And somebody here on TikTok said U.S. government bonds with the current possible shutdown or crash. You just don't understand bonds. So that comment is a negative comment against U.S. treasuries because, he's saying, well, what about the government shutting down? What about the government crashing? Listen, the U.S. government, or the United States, just let's call it that, or the U.S. dollar, is the nicest house in a really shitty neighborhood. Compare it to the rest of the world, we're still the best. Okay. So all of you that are doom and gloom the U.S., and hey, the U.S. sucks right now. I'm not going to lie. There's a lot of shit on. They need to take this administration and literally flush it down the toilet and basically all of them and start over. I'm not saying Trump is the answer. I'm not saying Biden is the answer. I'm just saying we need something new because what's happening there is corruption, lies, and bullshit. And I don't care what side of the fence you're on politically, if you can't see what's going on, that they are literally destroying the country, then you're blind. You're blind. I'm not saying Trump was the answer either. He had his own faults, but there's faults with every politician. The problem is the entire system the way it is. We've allowed it to have too much control. And that's what we need to do is take back control. And we're going to be showing you how to take back control with this show. This afternoon at 1 p.m., we are going to be talking inflation. But we're not going to just tell you the problem with inflation. You already know inflation is a problem right now. We're going to tell you how to beat inflation. We're going to tell you 5 simple strategies on how to beat inflation. And guess what? Today's training is free. Just get on there, register. Okay, it's all over the internet. Just go to chrisnaugle.com and click on Wealth Webinar Wednesday and sign up for free. Oh, you can't make it because you're working at 1. Good for you. I'm glad you're working. We'll send you the recordings. Join us today or get the recordings from today by registering, and you will learn all about about inflation and crypto. I said crypto because that's one of the hedges that we're going to be talking about. So listen, I'm trying to help all of you understand how to play this game that's coming, how to prepare for the storm that's coming, because it's going to be nasty, folks. Steven's putting another slide up. What do we got, Steven?
So what if inflation is here to stay? Is this transitory? Some of the factors driving them certainly aren't. So if we have this high inflation and it's here to stay, how does that affect your dollars? How does that affect your wealth? How does that affect your retirement in 10 years, in 20 years, if you continue doing what you're doing and not make any changes? And that's what, that's what today's wealth webinar is about. That's what this coming weekend's 3-day Money School Essentials training is about, is educating you on how money works, on what is actually happening right now in the economy, so you can prepare and get ready and protect your money and protect your wealth. And
Dude, I love it. And did you see Slayer's comment here? It's on Instagram. He says, how do you beat inflation? Make more fucking money. Yeah, but how do you make more money if the whole market collapses and your job goes away? Have multiple streams of income. Make sure your money's always working for you while you're working for money. You work for money, but one thing most of you are not doing is making your money work for you. You haven't learned how to do that. That's what we teach. I'm going to teach you that today at 1 o'clock. And hey, some people learn better in person. So we've got something pretty cool. So I'm going to tell all of you this, and you guys can do whatever you want, but November 12th, 13th, and 14th, we are going to be in Las Vegas. So I'm showing TikTok, Instagram, and all of you. We are doing a live event, a 3-day event in Las Vegas. The tickets are $297 for regular admission, $497 for VIP, which gives you a cocktail hour to spend time talking to us. Join us out in Las Vegas. Make a trip. I mean, hey, yes, I know COVID's still around, but hey, come on out to Las Vegas, November 12th, 13th, and 14th, and have a good time and learn some serious stuff, because we're going to be talking about taxes, how to mitigate taxes, and how not to pay the government taxes. We're going to be talking about how to be your own bank. We're going to be talking about how to protect your retirement. We got 3 days live. So if you guys want to join us for that, that would be awesome. But that's November 12th, 13th, and 14th. You can go to my website, chrisnaugle.com, and sign up for that. But let's get into, Stephen, I hit some of these questions. We got so many amazing questions coming in. So right here, let's see. Black Magic on TikTok came up with something pretty unique, and I like this, and I want to address this. Do you think the Federal Reserve banks will pull the rug on crypto and their own government-backed crypto? 100%. China just did it, and if you don't think U.S., especially this administration, is going to copy what China is doing, making crypto illegal, literally. Citizens, or whatever you want to call it, people that live in China, they can't own crypto. It's forbidden. Why? I'll give you one guess. Can anyone tell me why China made crypto illegal? Control. If you haven't seen the writing on the wall, it's all about control. They don't want a currency or whatever you want to call Bitcoin. They don't want their citizens to be able to put money in Bitcoin and then move their currency to another country, which in Bitcoin they can. It's very easy. It's a virtual digital currency. They can move it anywhere they want. So China wants everything to stay in China. So China came up with their own digital currency, which is great. Like, hey, they can trade it. It's all the same things as what Bitcoin is in China, with one exception. It can't leave China. See? They're smart, man. Those little buggers are smart over there. Well, you don't think our little buggers here are smart? You're darn right they are. Of course they're going to make Bitcoin illegal. They did it to gold. Why would we do it to Bitcoin? And that will tank crypto. Okay? Cryptos, all of them. Shitcoins will just be done and gone. Some of them, not all. But Ethereum and Bitcoin will take a dip, my prediction. But it will still be an incredible investment because you can't get rid of it. You can't get rid of Bitcoin. You can make it illegal. They made gold illegal, and they made everybody trade their gold in for a stated amount. But is gold still going up? Yeah. Look at when they made it illegal and they tried taking it back, and where's the value today compared to there? Right there, folks. You want a good barometer to know where Bitcoin could go? Look at gold, because it's going to be similar. They will make that illegal. Mark my word. Bus trip in the future. Darn right. All right, let's go over here. We got so many great questions. What did Blaine say? What are your thoughts with the infrastructure bill being passed and them hiding legislation regarding crypto?
Right. Exactly. And they're sneaking it in right under our noses in these big $4 or $5 trillion bills. Like, who knows what's in these things? And I mean, we don't even know what the infrastructure bill is. It has more pages than the Bible. Think about that. The infrastructure bill is more pages than the Bible. The infrastructure bill is more pages than anything you would ever read. Do you think they actually read it? You think the Republicans, the Democrats, and all those shitheads up there are reading any of this stuff? No, of course not. They're just saying, what's in it for me? So if I sign this bill and give you guys $3 or $5 trillion for the stupid infrastructure bill, what's in it for me? Oh, you're going to give me that? Great. All right, I'll sign. That's what's going on in DC, folks. It has nothing to do with what's in the bill. The bill probably isn't even for infrastructure. I don't know. I'm not going to read it, and nor are you. So you need to really just understand that what's going on up there has nothing to do with helping you. And if they do make it seem like they're helping you, they're trying to buy your votes. Nothing in life is free. And if you're standing there with your freaking handout, waiting for a handout, that's the most expensive handout you'll ever get. But if you are doing that, shame on you. You are destroying this country, and you're destroying your kids' futures. That's all I have to say about that.
It has nothing to do with politics. It's factual. Look at Rome. Look at what's happened. Michael just said that. Look at what happened to Rome. Like, just study history, folks. History doesn't predict what's going to happen, but history gives you a great barometer to understand what could happen and how it happened in the past. 1929 is the closest thing to what's coming, but you got to sprinkle in the dot-com crash. Here we go, Stephen. What else you got?
Well, you got to remember too, like, you know, what the talking heads on TV and what the news tells you, there's always an agenda behind it, why they want it, right? So now here come all these guys, JP Morgan's, Jamie Dimon, for instance, talking about how if we don't raise the debt ceiling and we default on our credit, it's going to be potentially very catastrophic. You had Yellen coming out yesterday saying the exact same thing. So they're pushing to raise this debt ceiling, saying, don't worry, we're going to pay for it. But when does it end? I mean, we're already, what, $28 trillion in debt? And it just, you know, when does it stop? So we have these bills right now, 1.2 trillion infrastructure, 3.5 trillion reconciliation spending bill, right? And all this stuff out there right now. They say that it's not going to cost anything. It's going to pay for itself, but we're raising debt limits. It's not, you know, they're putting it out over 10 years, 15 years of spending and 10 years of taxing. It's just, none of it adds up. So when you start seeing this stuff come out in the news and these top advisors talking about it, just know that there's more behind the picture than what you're actually seeing.
Yeah, and Colorado over here on TikTok said, do you have any clients in Colorado? Yeah, hundreds of them, but we love Colorado. And then he says, this is really smart of him to say, he says, big government hates decentralized currency because they don't have, which is Bitcoin, folks. Okay, but Bitcoin is not it's not money. Because you can't, there's no exchange, right? You can't exchange it for goods and services yet. That's coming. Bitcoin and, let's just call it crypto is in its infancy stage. Be very, 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 very careful with any of the shit coins. They will be gone, and so will all the money, because all those shit coins, folks, I just want to bring you to the level of understanding. Those shit coins are based on one thing: investor confidence. There is no backing. There is no fundamentals. There is nothing behind it. Think the dot-com crash. A lot of those tech companies were a house of cards. These shit coins are a house of cards. Bitcoin and Ethereum probably will make it through. I can be very confident about that. And every economist you look at, with the exception of Warren Buffett and some of the people he surrounds himself with, they're all saying that yes, they'll follow the market down, and you could see a 40 to 60% drop in the price of Bitcoin. But eventually it will probably go up. If they ban it, that will actually, I think, this is my opinion only, if they ban crypto like they did in China, I think it will make Bitcoin in the long run more valuable, because it will be harder to get, and it just will become more valuable. Think guns. Guns are tough to get. I literally just bought 3 guns. I had to have a friend down south get the guns, ship them to PA. I got to drive to PA and pick them up. I live in New York, if you don't know. So it's tough, but gun values have gone up through the roof. Number one, because there's a lot of demand for them. But number two, when you make something more difficult to get, it becomes more valuable, right? It's just logic. So what other questions?
Chris, real fast, if you want to really learn crypto, like if you believe that's going to be the future, that's the place to be. We have a multi-million-dollar crypto investor coming on our 3-day training this weekend. Money School Essentials starts Friday morning, and he's going to teach everybody the right way to do crypto. He's going to teach you what you need to know if you think that this might be one of your alternatives, place to put your money and to build wealth into the future. You don't want to miss what Spencer has to teach. He's an unbelievable guy. And Chris, I know we had an unbelievable response last night to the discount we offered on the 3-day training. Do we want to offer that to the What the F crowd, or do we want to make them come to the wealth webinar and give them the coupon code there?
I mean, let's put it out there. I think I don't know how many we sold last night, seats into this weekend's event, which is a 3-day training this weekend, where we're going to talk a lot about crypto. We're going to talk about be your own bank and how infinite banking concept can be played into your lives no matter where you're at. We're going to talk about stocks. We've got Sodi talking about hedging and some stuff you've never even heard. Sodi is my professional trader that trades our hedge fund, just so you know. We've got real estate people talking about notes. We've got real estate people talking about mobile home parks and how you can invest in mobile home parks without actually buying the mobile home parks. We've got Kelly Cardona coming in, who he's built a brand that is just incredible, that was noticed by Paul Mitchell. You'll hear his story, and he'll teach you all about building a brand. God, we've got so many speakers coming in. It's going to be absolutely phenomenal. And what we did, it's $287 a ticket to this 3-day event this weekend. It's fully recorded, plus you get a whole bunch of stuff. We offered it for $197, and people freaked out and bought most of the tickets because I only put 20 up. But how about we do this? This is what the F happened. Let me open up another 10 seats at $197. Okay. And all of you can do that. So here's the deal. Stephen, if you want to put it in the chat here, Instagram, when we're done, I'll put it in there. If you guys are interested, you just go to Money School Training. It's easy. Money School Training. All right. Go to moneyschooltraining.com/registration, moneyschooltraining.com/registration. And then when you go to the checkout page, there's a coupon code. The coupon is 2021.
I think that expired. I believe that expired last night, Chris. I believe that they set up a new one for today.
Okay, what is the new one? Do you know what the new one is?
I believe it's Blowout.
Oh, okay, yes. So that one expired, so skip that. moneyschooltraining.com/registration. When you get to the checkout page, you go to coupon, put in Blowout, and you will get that discount. So I don't know how many there are. I'll open 10 up at that price. So any of you that want to join us this weekend and learn from Spencer on crypto or anything else, that's offered to you guys now. So moneyschooltraining.com/registration. Pretty simple. Coupon code Blowout, baby. It's going to be a blowout. So, all right, let's get back to this. Freaky consumption is the cause of stress out on people. Do you recommend buying Bitcoin mixed with your whole life? Oh, yeah. So actually, Colorado conservative just said, do you recommend buying Bitcoin mixed with your whole life plan? It's not mixed, Colorado. What we would do is change one thing and put the money into the private banking system, then take the money out and invest it in crypto. And absolutely, like crypto, can anyone tell me right now where Bitcoin is? Is it at 40 or are we at 41? Like, where are we at right now? I didn't look at it this morning. Can somebody give me a read on that? Anybody, just go to
42.17.
42. So it went up about $1,000 overnight. Okay. But still at 42, it's probably a decent buy. You can watch it and get it closer to 40 like I would. But if you buy it at 42, just the most important thing, folks, is the exit. When it hits 49 or 50, you got to get out. And you got to play the game. And if it goes to 60, don't be upset. Just be like, man, I made money. I've never met anybody in my life, from Instagram to TikTok to Facebook to YouTube. I've never met anybody that's pissed off when they make money. But I met every person I've ever met that's lost money was pretty damn mad they lost money. Shame on them. You lost money because you didn't follow the damn rules. And the rule, buy low, sell high, don't lose money is the automation. But what does people do? They buy into FOMO. They buy high like they are right now. And then when the market goes down, they get scared and they sell low and they lose money. And guess who's making? Me, Warren Buffett, Ray Dalio, and all the guys. Michael Burry, who's predicting the biggest crash in history. So you guys don't know who Michael Burry is? Watch The Big Short. That's who the movie was written about. You got it. All right, Stephen, what other questions we got? We got a lot of good stuff. Man, I can't even keep with all the questions. This is freaking awesome.
Keep rolling. I'm just working on the code.
Yeah, Charles said, do you consider Doge, Solana, and Cardano shit coins? Cardano, probably not. Dogecoin, it is shit. It is shit. I don't care what you think. Dogecoin was started as a joke. It's a shit coin. I would be out of Dogecoin faster than I can faster than I can do anything. And then Solana, I don't know about. But join us this weekend and ask those questions to Spencer. He's way better. Listen, I'm the boring crypto guy. I play the support and resistance levels of 40 and 50, and I make money. And that's it. That's all I do. So Bitcoin, 42.5. Let's see. What else do we got? We had some really good questions here. I'm going to put them up on here. So which companies do you believe will start using Bitcoin as a means of exchange? I think you'll see Tesla. I think you'll see some sporadic, people start using Bitcoin or accepting it, but it's not going to be widely accepted because it's far too volatile. No companies are going to accept Bitcoin because of the volatility unless they're heavily positioned in Bitcoin. I wouldn't be surprised if in the next couple of years you start seeing some of the insurance companies adopting Bitcoin, because remember, an insurance company can play the long game. So even though it's very volatile, insurance companies will measure that volatility and weigh it out over the long haul, but that's still a few years away. Again, you got to remember, crypto is in its infancy stage. NFTs, hey, listen, like I've been learning a lot about NFTs lately, and NFTs might have some, and you might be like, you mean the art thing? It's not going to just be art. That's just where it started. But it's really trying to create an exchange. They're trying to create something that can be exchanged on a regular basis. They just started it with art. So pay attention to NFTs. Am I investing in NFTs? No. Should you? I don't know, whatever your risk tolerance is, but I think you need to watch that because there's really some substance to how that's working and what that could do. And the Ethereum, if you really understand that, and Spencer's going to really dive into Ethereum, I think that one's got legs. I think that one's got more legs than Bitcoin, if you really want to ask me. So Ethereum, Bitcoin, and then, the NFT that's going on really is not bad. Whoa, I just put the NFT up and a bunch of people were bombing the questions on that. So Bitcoin going to 52 prediction. I think that's Drew. I think that's a really smart prediction. I would almost bet that Drew probably knocked it out of the park right there. We're at 42.5 now, and he's saying it's going to go to 52. So if that's his exit, he needs to get out. Drew, damn it, if you don't buy and sell at 52, I'm going to be pissed off at you, dude. You got to follow your own rules. Write them on the paper. Put them on your mirror that you look at every day. Buy Bitcoin at 40. Sell Bitcoin at 52. That's your rule. And when it hits 52, man, if you hold it thinking, oh, it's going to go higher, shame on you. You will lose money every single time if you bend your own rules. Like, what's the point in investing without rules? So, like, if you don't have rules in your life, what's the point? You're just in the wild, wild west, literally a drunken driver. Get off the road. Like, it's dangerous.
Hey, Chris, let Instagram know it's 2021. Correct.
Okay. So Instagram,
we ran out of it. So we had to open up seats with the,
okay. 2021 is the coupon code. So you go to moneyschooltraining.com/registration. And on the checkout page, you put 2021 like we initially thought, and you get the discounted price. So we have 10 spots left for that. We just confirmed that. Boundaries have to be set no matter what and when to walk away no matter what. So Drew gets it, man. Drew on TikTok just said that. Like, of course I got rules, man. Like, duh. Like, I'm going to follow my rules. But Drew, how many people out there don't follow rules? How many people out there don't have rules? They invest blindly. They just throw money in a 401k saying, well, I hope it's there. Seriously? Like, don't even get me started on 401ks. I'll do enough of that this weekend talking about why 401ks are a trap, and all of you are playing right into the trap. It's kind of like, you're trying to trap an animal. You put the treat inside the cage, and the animal comes up, looks at the cage being like, it's probably a trap. Man, I'm hungry. And it goes in and it gets trapped, and I don't know. Hopefully it's catch and release, but some of them are not. So that's what's going on right now. 401ks are a trap because taxes are never going to be as low as they are now. So you're taking the trap. So what is the bait inside? Oh, we'll give you a tax deduction. You don't have to pay tax on the money you put in the 401k. You mother effers, you got to pay tax on the whole harvest later. And when you pay tax on the harvest, it will be more than today because taxes are going up. Think, people, think. Holy crap. It's like not hard to understand what's going on out there. And it's not hard to understand that you're being freaking lied to about your money. You've been lied to your whole life. Stop it. Change it. You can put yourself in control of your money. You just got to learn how to change one thing. You got to learn just a few things. You don't have to understand algorithms or options or any NFT shit or Bitcoin. No, learn what the wealthy do with money. It's so easy. And that's what we're going to be teaching you this weekend. So what else we got here? We got some more questions, Steven?
Yeah.
401k loans. Okay. So let me hit this one. So Juan just came in and asked about 401k loans. Juan was on our training last night. So if you've already got a 401k, don't beat yourself up. You're like, man, Chris, you said 401s are maybe a trap. But if you've already got, listen, we already got it. We're already in the trap. Let's figure out how to make a cool little place inside this trap. So there is loan provisions if you're still working for the company. We can use those loans and become our own bank. And it really is just a play on when we take the loan out, the next step is where does that money go next to make more? Well, a lot of people have 401ks that have a lot of credit card debt. And credit card debt holds high interest rates, 10, 15, maybe 29%. Let's just say you got a credit card with Visa that's 20% and you got a 401k and the credit card's killing you. You owe them 20 grand and they're dinging you every month, couple $100, and it's all interest. That money's leaving your family forever. Think about this. You take a loan from your 401k, which you can take 50% or 50,000. So now you got that 20 grand that you took from your 401k. And the 401k is going to charge you interest. Let's call it 5% for all intents and purposes. So on that 20 grand you took from your 401k account, they're going to charge you 5%. And every pay period, you're going to pay back that 401k interest and principal. But we take the 20 grand and we pay off that Visa card that was charging you 20%. We take the $200 you were paying to Visa every single month, which was all interest, and we put that back into our 401k, paying our 401k balance down. You just recycled and recaptured 20%. That $200 you're giving to Visa, that's you making 20% because you're giving away 20%. Now you got 20% going back into your 401k. So the spread is now what? 15% because you're paying 5 on the loan and you're taking back 20. So the spread is 15. That's how your mind wants to perceive it, but your spread is not that. The 5% in loan interest the 401k charges you, when you pay that back, it's going back into your account. You're making the 5%, you're keeping 5%, and you're keeping the 20% that you used to give away. Think about that. How many more times can we use loans from our 401k to better our financial position without working any harder, without working any longer, without taking on any risk? There's no risk in that transaction. And without ever giving up control of your money. So if you've got the 401k, let's use that son of a bitch to be the bank. Hopefully that helped. We'll go into that again this weekend for sure. We got anything else, Steven?
Yeah, the last thing I wanted to kind of end on here was we like bringing up the fear and greed index. We bring this up every couple of weeks to see what emotion is driving the market. What are people thinking? And, the thing with the fear and greed index is fear is just not understanding what's going to happen, right? So right now that makes sense. Everybody's fearful. We're seeing the markets come down. This is a huge week for policy and legislation as far as all these different bills. And are they going to raise the debt ceiling? And is the government going to close down? And are they going to be able to pass all this stuff? And what's going to happen? So people are scared right now. Is inflation going through the roof? Or are we going to be able to control it, right? So everybody's scared. So that's driving the markets. But guess how do you overcome fear? Being educated, right? So everybody knows that something happening. Everybody knows that there's going to be some kind of impending correction or crash or what's going to happen. Like that's almost like everybody I talk to says that to me, right? Maybe it's just the people that I hang out with and talk to, but every single person believes that, all right? Yeah. So that makes sense with the fear. So again, it leads right into the perfect timing of us doing this training this weekend. I mean, we're not doing another 3-day training until 2022. So there won't be another one until January, February of next year. So this is the last time. So if something happens between now and then, when do you need to be prepared? Now, right? You need to start preparing for this stuff now. So this Money School Trainings Essential that we have this weekend is the starting place for that. It's what's going to open you to some of these alternatives. It's going to open your eyes to what to do with your money, what to do with your 401k, what to do with your retirement accounts, how to prepare yourself for what's coming. And that's what this weekend is about. So it's happening. This shows it right here, this chart, this fear and greed index. Be ready. Are you ready? That's the question is, are you ready?
And listen, I got to give a shout out to someone on Instagram because, I have a lot of respect for truck drivers. Truck drivers are the backbone of this country right now. And if you don't believe that, let the truck drivers go on strike and see if you can get your milk, your cheese. You already saw this happen during COVID, right? They couldn't, there was backup. So I got a ton of respect first and foremost, I got more respect than anything for our military. So thank you to all our veterans and all of our current military for your service. We owe our freedom to you. And if anyone ever disrespects that, break their fucking nose. Okay. Thank you to our veterans and our current military, but also thank you to our truck drivers. What's that, Steven?
Just as far as vets go, we were hanging with this guy, Eric Power. He just wrote this book, Don't Shoot Your Future Self. And all they do is a pathway for veterans transition. So all they do is help vets. But check out Eric Power. You can go to don'tshootyourfutureself.com. Don't shoot you. And we raised so much money. Chris and I were out at an incredible event last week in San Diego and raised millions and millions of dollars for a couple different organizations. One of them dealing with homelessness, another one dealing with cancer, and Eric Power and what he does with vets. And it's such a beautiful thing to be able to give back and help people like that. Absolutely. And thank you for all of your service, guys.
Yeah. And then, let's get to this truck driver. He's got a question here. He said, I want to join your classes or pay you for personal training. You don't have to pay me, buddy. I give all my best stuff away for free. If you want mine, you just come into that 3-day class for that discounted price we just gave. I'm new to the whole life, which is the privatized banking and trade period. So I'm new to whole investing and trade period. That might be a talk and text, but I love what you guys do to help the masses. Well, we love what you do because you're the reason that my family has, food. You're the reason my family can get things. You're the reason why this entire country is moving and trucking, maybe not always in the right direction, but thank you to you. So listen, my gift to you, and all the truck drivers out there is all my stuff is free. What the F is free. Today's training at 1 p.m., the Wealth Webinar Series, which we send you the recording. So you might be driving and being like, man, I can't watch this. You can listen to it, and then we'll send you the recording. If there's something that you want to watch, maybe we show a chart, you can watch it later, man. Free. Okay, my books, Mapping Out the Millionaire Mystery, all about the privatized banking, the Private Money Guide, and my new booklet teaching you how to get all the money back for all the cars you're ever going to buy, drive, and own. Free. Just go to Chris.com and just click and do it. If you want the hardcover book, you got to pay your own shipping, man, because I'm not paying the USPS to get you your books. You got to pay for that. But listen, I give it all away for free. The only thing you can really pay for is if you wanted to be in our community and have our group coaching, it's a whopping $19 a month. You can just go to chrisnaugle.com and go to MSTV. It's $19 a month, and you get me and Steven and whoever my mentor is that I bring in that month for 2 hours every month, plus a whole bunch of trainings and free stuff. It's $19 a month. Like we're trying to give everything away so that everybody in this country can have access to learn how to take back control of their money. That's our mission, is to help people solve their money problems by putting them back in control of their money. Now, mission cannot be superseded with self-needs. Self-needs are someone that says, hey, I can help you with this, but you got to pay me this. Bullshit. No. Yeah, it's $19 a month, but that's just because we have expenses for marketing it. And then this weekend's event, like you're going to get that for $197. It's 3 days. Listen, Harry Dent Jr., a leading economist, is doing a session. He would charge thousands of dollars to hear him speak. You get him for $197 and everybody else. So like, I'm not trying to charge, but listen, we spend $10,000 just in marketing to put on this 3-day event. All we charge for is we understand the rules. And here's the rule. People don't take something serious when it's free. And I don't mean to say that. Some of you do, but the average person, they'll invest their time, but they'll only put so much value on their time based on their circumstances. But if it's free, there's not that investment of money. But if somebody invests their time and their money, they will take it serious. We try to keep it incredibly cheap so that everybody can afford to do that at $197 with the offer we just gave you guys. No, it's $297. But we have to have you invest your time and your money. Otherwise, you're not going to do anything with it. And knowledge is useless without application. Application typically doesn't happen unless someone spends money and invests time. Got it? That's why we do what we do. And Gabriel, I think it's Gabriel on here. Shoot, Gabriel. Let's see. He said, I need to start a whole life policy with you guys. How do I do that? Shoot a DM. I think it's either, it's Gabriel. Shoot me a DM and I'll send you the 90-minute video and the link to set up a call. So we got so many questions coming in. I don't even know where to start. What do you think about PHP life insurance? I have no idea what that is, man.
Chris, I'm going to have to dip out.
We got some calls. So listen, folks, we went a little bit over today. We were having a ton of fun. To TikTok, we love you guys. And also any TikTokers, we didn't have anybody argue with us today. I'm sad about that. So we didn't have anyone argue. So we always want you to argue a little bit because we want to argue points. But can we buy the hard copy books on the site? Yes, go to chrisnaugle.com and you can buy them. And also this weekend, one last time, we'll put that post up. If you guys want to come this weekend to the training, you just go to moneyschooltraining.com/registration. If you have a question on TikTok, Instagram, just shoot me a DM and I'll send it all to you. But with that being said, folks, thank you all for joining us for another week of What the F Happened. Have a beautiful week. We'll see a lot of you at 1 o'clock Eastern today on the Wealth Webinar. Again, go to chrisnaugle.com and register for free. We'll see you soon.